Nervous about the volatility of public markets? Looking to invest in Canadian real estate but not finding the right opportunities? Neighborhood holdings may be an option. Nearly 10 years of consistent performance, Neighborhood aims to provide stable income while preserving invested capital, target net yield above 8%. At the heart of the strategy is Neighborhood's mortgage product portfolio of first position 100% residential mortgages across Canada with an average loan to value under 55%. Neighborhood partners with mortgage brokers and financial institutions who support quality borrowers in transition who may not currently qualify for traditional financing and have a temporary need for capital. Neighborhood's portfolio has no exposure to commercial, construction, or bare land properties, is geographically diversified across major urban and suburban centers in Canada. Check out the links in the description or visit neighborhoodholdings.com to view the offering memorandum for investors and advisors or to explore mortgage broker partnership opportunities. This is not advice. Please consult a professional advisor before investing a loonie in any of these investments. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble.
Welcome back to the Looney Hour, episode 211. As always, join the three amigos, two, technically, but Boomer.
We always start with Rich, don't we? What we're doing?
Yeah, we do start with me.
It's been a long day.
It has been a long day. It's been a long day. I'm supposed to come up with a story, and I guess the thing is, I was here. I was trying to organize a date for myself for tomorrow. That's the story I have for everybody.
You have a date lined up?
I do have a date
Who
lined up.
is it? Is she in this room?
No, she's not in this room. So we're going for sushi tomorrow at 11 o'clock, or 12 o'clock. So I'll let you guys know next week on the Looney Hour.
That poor girl.
Well, so Rich and I flew out yesterday from the East Coast, which is a long flight, by the way. Halifax to here is about 6.5 hours, 7 maybe if you're on the plane, from gate to gate. So we were tired yesterday, but we did wake up. We went walking down. I call it the waterfront. So what's the place down the sea with the fake sails?
Cole Harbor.
Yeah, exactly. So as soon as we hit this place, Rich looks across the harbor. He's never been here before. And he says, "Oh, that yellow stuff, that's the sulfur mound, and sulfur is used in." You describe like 5 things.
Yeah, it's very important. It's an industrial component. Never mind.
And then we walk a bit further, and he says, "Oh, this was." I'm going to get the name wrong here. It was actually they had signs and stories about there was 2 mill plants. One was run by a bunch of partiers, and another one was pretty dry. And over time, the party one fell apart, and the dry one succeeded. So maybe that's kind of what tonight's episode is like here. Dry, then maybe not so dry. But the point is, walk around with Rich. You never know what you're going to hear from him. He's just a knowledge of information. And we'll get a bit more now tonight with it.
Yeah, go for it.
Super annoying. But yeah, we got a lot lined up. There was a question earlier on the Richmond stuff, First Nations. We'll get to that. Government, CPI, Bank of Canada next week. We'll get into a live Twinkie bet.
Yeah, we're going to hold you guys to it, by the way. We want videos of everyone eating a Twinkie if you get it wrong.
UK budget, more job layoffs, global carbon tax. There's a lot going on in the world. So I don't know if you guys saw that, just always starting off with housing, but the housing minister, Gregor Robinson, former mayor of City Vancouver, he says the average price of housing, not necessarily individual home values, must fall to restore affordability in Canada.
Yeah, that is like incredible doublespeak. That's like Orwellian, right?
But that's like the whole like Canada is like nobody wants to allow like a house price. Nobody wants to say house prices maybe should go down.
They should go down, and they should go down relative to incomes, which is I think on the first Looney Hour ever we talked about this. We talked about how no politician could ever get up there and say, for housing affordability to improve, you need house prices to fall, and that's the platform I'm running on. Please elect me. I'm going to tank housing prices.
You know what's crazy though? So Canadian house prices have fallen 18%
from the peak.
From the peak. So if you look at the National Home Price Index, that's the largest decline in at least the last 50 years. So peak to trough right now, it's 18%.
You're calling a bottom.
Yeah. But even after that decline, house prices have outpaced incomes by the most of any OECD country since the year 2000.
Yeah.
So even with the sharpest correction.
So you're not calling a bottom.
So the strategy now is to have housing fall further. That's what they want to do.
He just said he's going to build social housing in the factory.
Well, the strategy is to just lie to people, basically, and not be straight. But that's what he's saying. He said the average needs to come down, but your individual house price can't go down. I mean, it's just mind.
So there's one of my favorite central bankers in the world is this, I think he was Dutch, or he still is Dutch, Jean-Claude Juncker. Anyone here remember that name from the ECB? Yeah, a couple of guys.
One person at the back.
So this would not be Jean-Claude's kind of crowd tonight, because this is kind of dry, and Jean-Claude or JC, he was always under the table all the time. And very well known fact. But he actually came out, back when the Europeans had their crisis in 2012 or 13, whatever it was, he actually said, when it becomes serious, you have to lie. And he said, all governments will always do that. So let's hold that, sort of as maybe that's the theme for tonight.
Well, speaking of lying, so it's funny, Mark Carney put out a tweet yesterday. He says, housing starts are up in September. That's good news for younger Canadians looking to buy their first home. So he notes, it's a Globe and Mail article, the annual pace of Canada housing starts jumped 14%.
So is that true?
So if you look at it from like a seasonally adjusted annualized rate.
Okay, I like it. Yeah. Just speaking my language.
Technically speaking, they increase, but like there's nothing that I have more conviction in today that housing starts are just going to completely fall off the cliff over the next 24 months.
Why?
Well, I mean, everything we talked about in this panel first.
Well, I wasn't listening to the panel, and Keith and I were yucking it up out there.
Well, you need seasonally adjusted for housing, because you guys don't work in the summer, right?
Never work. But like pre-sales, there's like a recipe to get to a housing start.
Okay.
And so like ingredient number one is like you have to be able to pre-sell in order to get the bank to finance your shovel in the ground.
Okay.
And so if you have pre-sales running at 30-year lows in the GTA and 10-year lows in Vancouver, I mean that's your future housing start, which is like it's not getting off the ground. And so I think it's an important context when you look at housing starts and the government reports this figure is CMHC quantifies a housing start once it's built back up to grade. So like
and
once
grade is ground level.
Yeah, like basically once you dig your hole, then you pour your concrete foundation, now your foundation's back to grade, then like the CMHC guy like comes, checks out and says, okay, yeah, good to go. So like that's 2 years basically behind the 8 ball, right? Because like the first year is you trying to pre-sell.
But that's for condos. Like what about for regular houses if you're building a subdivision of...
I mean, condos are the vast majority of new housing starts today, right?
Is
like
that good for single families?
Think about that. How many single family houses do we really build
None.
today?
We don't need single families.
In BC, where we are today, right? It's a 30-year low in single family housing starts. Just don't build them anymore.
Crazy.
So,
But will there come a time when single-family housing numbers are not as important as like multi-units or condos?
I mean,
That's
yeah.
the way that the cities are moving, right?
I think the name of the game is all multi-family, multi-res housing, right? I mean,
Is that what people want? I mean, you must have clients from...
you don't have a choice.
What do you mean I don't have a choice? It's supposed to be a free market. I want a single family. I want a yard where I can have my dog eat the cat or children.
Rich just wants to find love.
I'm trying.
I think if you're building like a single family, like I can give you the dirt today for free. Let's just say like I'll give you a standard lot in the city of Vancouver. Go build your house. Like that house today, for you to go and build, because you're gonna you're not a builder by trade, so you're gonna go hire a general contractor and build it out. Like that's gonna cost you like bare minimum like 1.2 million.
Oh Jesus!
Right.
Keith,
so like it's
I need
never
a
really.
raise.
Then you got to talk about like your financing costs to go out and build that and get, like, you know what I mean? So like that's why we just don't build single family housing. It's like even to build it is really expensive. So if you have an old house, hang on to it.
But I mean, is that true in like smaller jurisdictions? I know it's true in Vancouver and Toronto. I understand there's only 2 cities in Canada, and everything else is a wasteland. But is it true in, I don't know, in Trois-Rivières or Red Deer?
Red Deer is God's country. Yeah, it's, it's cheaper to build housing. I mean, part of that is just like red tape, right? I mean, like city fees and taxes in places like Vancouver and Toronto are now 25% of the cost of new housing.
Okay.
And I just don't think any of that is fundamentally going to change. I mean, we're going to get to sort of government's big picture stuff, but at the end of the day, they're all hurting for revenue. I mean, we're here in the city of Vancouver, and it's been announced there's an upcoming election in 2026. So the municipal government said, listen, we're going to freeze property taxes 0%, no growth this year. I mean, obviously, ultimately they want to get reelected, but like part of this is like everyone's looking for revenues, right? Which is to say, like your development fees and charges when nobody's building new housing in the city today because nothing is viable and the market's crap. Those revenues are drying up. Now you're promising 0% property tax increases. So like something has to give. And what we're seeing now is like, they've announced it's public knowledge. Ken Sim's looking to slash $100 million from the city's $2.2 billion operating budget, which could potentially lead to, quote, hundreds of jobs. And so I think that's playing out in real time. And I don't think the city of Vancouver is going to be the only municipality. I think a lot of them are following. Like, think about Toronto.
Can I ask a stupid question? Can't they just do like a little cheeky revaluing of the properties? Because like I own this land up north where I'm trying to convince a woman to come live with me and so we can chop wood together. And every couple of years I get, like my taxes, my percent doesn't change, but they just revalue the price of the property. So isn't that kind of...
You mean the assessed value?
Excuse me, the assessed value, that's right. So isn't that a bit of a, so who are you voting for in the municipal election?
I don't know.
No, I'm teasing, but like what I'm saying is that he might say on the tin it says 0, but then they just go.
Well,
in the back
yeah,
door
I mean your
and
property
raise
taxes are set like on a mill rate and
Okay,
adjust
fine,
based
sorry.
on your valuation from BC assessment. So it's kind of a complicated formula, but
I mean,
I was going to say you could at the municipal level, maybe you can separate the operating budget.
we're going to talk about that. It's funny, I was chatting with someone earlier and they mentioned their friend sent them what's this thing you got? The TikTok? Is that the...
It's the TikTok, I think.
About the building in Burnaby, Steve, that you were talking about.
Yeah, the 4-story multiplex.
Yeah, anyone here from Burnaby? Yeah. Do you own that place that went up? No? But but the whole, when I look at it from my perspective, because I'm not involved with real estate and housing as much as Steve and the team we had here earlier, but for Canada it's really interesting because we have the main driver of growth in Canada for a long time now has been housing, and it is getting a bit weaker right now, and it's the same thing if you look everywhere around the world. It's always that. The world is in a constant state that it always needs stimulus to grow. The moment stimulus stops coming in or it slows, what happens around the world? It just stops moving. And it doesn't matter if it's housing or, these days we're looking at AI and the energy consumption with it. But we are at the end of this cycle that we talked about quite a bit before that. Without the stimulus comes out. And if someone is unwilling to lend, then that's stimulus coming out of the system. If rates are going higher, then that's less stimulus. And it doesn't matter if it's the Canadians or the Brits or the French and you name it. It's just so interesting right now because when we talk about real estate, we tend to get more into detail, Burnaby and multiplex and stuff like that. But at the end of the day, the economy, it's either growing, like it's beating, or it's getting slower and slower. And which, at some point we're going to do the Twinkie bet that's coming up. Because everything here is connected, So Bank of Canada, they're going to have a very important decision. Well, we can't do that though until we get the data.
We'll get to that.
It came out earlier today.
But it's interesting, right? Because you talk like it's all connected, and it's like funny because like we're talking about like housing starts, and like my view is that they're just going to get completely killed because nobody's buying pre-construction condos. The only thing that was like getting built to sort of like fill that void is like, yeah, a little bit of rental stuff for sure, but like multiplex was actually taking off, and they're like, oh, actually we don't like that. That neighbor complained and his rancher has this big shadow on it now. So like, we got to shut that down.
But that's the thing. Like I remember, somebody from CBC who was my arch nemesis mentioned that immigration is not the only reason that property prices have gone up. And he was right. And in the 2024 July Monetary Policy Report, the Bank of Canada laid out reasons, and one of the reasons was zoning, permitting, NIMBYism. I mean, we talked about this at length, but I mean, it's true. Nothing on that end is going to change. So even though house prices, so this idea of affordability, it's not going to improve. I mean, they don't want it to improve, A, and B, I don't think it's going to even if they did.
Yeah, like you got a new mayor in Calgary this week that just rolled back zoning of townhouses. So they just came in and repealed what the last 4 years of government did. So you can kind of see that, right? I think it's just like that's the challenge of like 4-year election cycles, right? It's like you do what you need to do, you say what you need to say.
What do you mean? Politicians are saying what they need to say to get elected?
You do whatever you can, right? It's like the Vancouver guy, right? He's, let's freeze property taxes, even though like feasibly we probably can. It's going to be very difficult to do, but like that's what needs to be done to secure an election win, and that's what they're going to do.
Bah, we're all sheep.
But there's other ways to there's other ways to fix, housing affordability. And Rich, I think this is like one of the key themes that we've chatted about on the show like numerous times over the last 12 months is looking at like BC Hydro, where we are here today, right? Which
We
is
actually have somebody from BC Hydro. Let's put them on the spot. No, I'm kidding. You don't have to
shine the
raise your hand.
spotlight on them. But like one huge cost to these new multiplexes, for example, in Burnaby, is that they all have to be powered. So you're taking an existing single family house and you're putting, let's say, 6 units on it. Those 6 units now have to be powered not by natural gas, which is effectively free in BC, but it has to be powered by like our hydro, our grid. So it has to be like this clean energy. But that's actually very expensive because you have to bring all the servicing in and you have to have these like effectively what they call them as pad-mounted transformers back at the property. So it adds to the cost of housing. And I always say like, well, your natural gas here is like, it's so cheap, it's so abundant, it's relatively clean burning. We ship it all across the world, but you can't burn it here. And so there was an article out this week in Bloomberg saying the BC government is moving to limit AI power use and to ban crypto mining because basically they have these large power calls out. Effectively what they're saying is they are saying, we don't have enough power on our grid. We see where the ball is going, and so let's just get in front of this right now. Like, let's limit AI power use and ban crypto mining.
I mean, is that good? Is that bad?
Well, I think it's telling you is like the cost of housing, not only from a servicing standpoint to install the hydro, but like to run people's heat pumps and EVs, and like that's just going to get more expensive. If everybody is on a heat pump and everybody is driving an EV, yeah, you're going to start running out of power.
I mean, in theory, if they like built a new hydroelectric dam or they opened up a nuclear power plant, I mean, couldn't that be sufficient extra gigawattage to meet that new demand?
I mean, I don't know, over the last 2 or 3 years, BC Hydro has been importing effectively dirty coal from the United States. There's been shortfalls, and some of it's related to like, the hydro dams and stuff, but I think ultimately I find that ironic though. You plug your car and you think like, oh, I'm doing, like you always joke about it, right? Because you're in Halifax, which is like people that are driving EVs there, but your grid is effectively powered by oil. No?
60% is coal.
Coal, sorry.
Yeah, I think maybe 70 is coal and crude put together maybe.
So if you're charging your Tesla in Halifax.
Yeah, but that's unfair because we know that it's more efficient use of like,
But you feel better about doing it. So what I'm hearing from this conversation, of course, is something that we've talked about a lot, Rich. Inflation driven by energy is going to stay elevated. And chances are we're going to run into some kind of an experience, whether it's here or somewhere else across Canada, where all of a sudden there's blackouts and things like that. Which is interesting because, our central bank in Canada, their mandate is what?
2% inflation.
2% plus or minus 1%.
Yeah, to fight inflation. They want to keep inflation down. And, of course, I've been talking about this for a while now. Now they're running into this exact moment in time when inflation is still sticky. It's not where they want it to be. Yet the housing market is getting weak. You're starting to see layoffs, across the country. The economy's not growing quite as strong as people want it. So, at some point in time, they're going to have to sell out. And how does the central bank sell out when they have a very explicit job mandate? They do it implicitly. So you have to start, don't listen to what they state, instead sort of hear what they're saying and what their actions are. And we have a whole bunch of central banks coming out next week. There's a bunch of them, and it's...
We'll get to that, but like this kind of feeds onto the point. So there was also a note, so Ontario electricity rates are going up 29% next month. So like I think, but we've talked about it more off air than on air, but that power grids across North America are going to be stressed and tested over the next couple of years with AI, right? Like the costs and the power load demands. But again, if you're the government, and you're saying like Canada, we talk about, you hear it on the media now, which is Canada's become this energy superpower, and it's like our competitive advantage is not like building chips in the next tech company. That's just not like who we are. We tried with EVs, and so far it hasn't worked out. But we can power, but Canada should certainly be the forefront leader of powering the AI boom, right? Like if you have an abundance of natural gas and fossil fuels.
And hydro and nuclear, and we have it's cold. I mean, the deals that Trump made with the people in Oman and different parts of the Middle East. Somebody mentioned it in the crowd. I can't remember who. So I'm stealing your idea. So thank you. They mentioned like why couldn't we have those deals in Canada? Why can't we doing that stuff here? And I don't understand why not. I mean, we'll see. There's no business case, I guess. Yeah. But anyway, should we talk about the CPI?
The CPI data? Hit it, Rich.
Let's do it. All right.
To the fourth decimal point, your diffusion index.
All right. So normally I have my computer in front of me when I'm ripping off all these statistics, so I sound a lot smarter than I probably look anyways. All right. So one of the most important data points that we've had over the last couple of days is obviously inflation. On the 29th, we're going to have the Bank of Canada's monetary policy decision. We're going to have a Twinkie bet. I'm going to hold you to it. So just really quickly, headline inflation rose 2.4% on a year-over-year basis in September, up from 1.9% in August. Some of the key factors was ex-energy. It rose only to 2.7. Ex-gasoline, it was 2.6. The things that really stood out for me were food. So food is really important because people on the lower socioeconomic class spend more of their CPI basket, or more of their consumption basket is focused on food. That rose 3.8%. I think it has a lot to do with the fact that the currency continues to fall. Remember, we export fossil fuels to import consumer goods. Food obviously falls under the consumer goods category. We obviously export other stuff, but in general, that's sort of how it works out. And the food inflation is trending higher, and it's in grocery prices. And we hear a lot about how these grocery stores are gouging. I think that's like a false narrative. If you look at the margins of these businesses, they're very, very low and basically have been flat forever. It's because they basically just pass through any of the extra costs that they get from food prices. The other thing that I thought was really interesting, Steve, is your favorite, shelter and the rent. So tell us, so the rent was 2.6%. Is that the right number? Or
No, it wasn't 2.6.
Yeah, what? Oh, sorry. Yeah, no. Shelter was 2.6, excuse me. Sorry.
Right. So rents. This is where I don't know who Stats Canada interviews. But
No, come on.
they were up 4 point. So rents in Canada are up 4.7% year over year and 6.1% annualized over the last 3 months. So, I mean, they think the rents are going up 5+%.
Yeah, that's right. But that's obviously wrong.
Yeah.
Is
Well,
that
I mean,
happening though on the ground? What you're sharing with
I think
us
every
is-
major metro, like you take like the big obvious three to me are like Vancouver, Toronto, Calgary, like they're all down 10%.
Yeah, but we know that because rents.ca, which is a great
Rentals.ca, they put out a report. I think they said they put out the report last week, and they said for 12 consecutive months, year over year rent growth has been declining. So it's like. Then you have CMHC. I think obviously Stats Canada is basically doing like surveys. So what they do is they call property managers. I think what the challenge there is like rentals.ca reports asking rents, right? They say, okay, like we aggregate the data on our website and it says people's asking rents are coming down. They're clearly not getting what they want. But
So this is going to get revised away next month.
I don't know if it gets, no, I don't get, so what Stats Can does is they go and say, oh, you're a property, you own a building, you property manage a 50-unit apartment building, your rent's turned over. So like, your rent turned over, your lady the market rent is $2,000, your lady's been in there for $1,500, her annual rent increase came up, so you raised it by the government allowance in BC of the max rent 2.4%. So like their rents are rising, but like the actual turnover, anyways, there's some nuances there.
There's other stuff going on that I think is really important because rents fall into the category of services, and services we know have been sticky. We've talked about this a lot. Services are more sticky than goods inflation, and that's where I think the real issue is. And then because the goods inflation rose to 1.6%. That was, and that's partly because of energy, partly because of food, etc. The thing that I think is really interesting is, of course, the IceCap inflation model. Never marry a model, only ever date one. Or my favorite quote ever, which is from a statistician, and he says, all models are wrong, but some are useful. And our IceCap model continues to suggest that inflation is rising, and it's because of producer prices, and specifically raw materials prices that are affected by things like gold, so you have to be careful because gold is a huge component of that, and it's pushed up raw materials prices. But even if you exclude gold, you're still getting a rising in producer prices, which does a great lag kind of read through to consumers. And so that's the thing we're going to get to it in a minute, but that's the issue, right? And then finally, as we always talk about, which is the 3 preferred measures of core inflation, which you can already start to see, Keith, you'll love this. There already is a trial balloon by the Bank of Canada to tell basically people that we're going to stop thinking about it, stop worrying about it. That even though they literally called it the 3 preferred measures of core inflation, that's what it's actually called on the Bank of Canada website. We're already starting to get trial balloons of them saying, actually, they're not that preferred. We're less preferred than it was because it no longer basically meets it's no longer useful to what they want, which is to lower rates.
So what now? So with the data came out today, with the Bank of Canada meeting next week, they have to decide whether they're going to cut rates or not cut rates. In your view, Rich, how troubling was this? Maybe that's not said the right way. What kind of effect will this CPI data, specifically with the the rental rent component, you think that's going to affect them with the decision next week? Or no, they're getting another call from Ottawa to tell them something else.
It's tough, right? Because on one hand, you have the rental component, which is a big chunk of shelter, which is 38% of core, which is a big chunk, obviously, of the CPI basket. And we know that that's wrong, it's too high. But the other problem is that the 3 preferred measures of core inflation are literally designed to parse out the central tendency, right? We have one that's a trimmed mean, one that's a factor model. I always forget, you know what I mean? But the point is on the website, the way that these PhDs in econometrics have designed it is to really figure out what is the central tendency of core inflation, and that is rising unequivocally. And then if you think and you add on things like producer prices that are also rising, suggesting higher inflation. And so you're in a situation where we're already at negative interest rates. Negative real interest rates, meaning that the policy rate is already below these numbers. And so I don't know the answer to your question. I don't know how they're going to...
That's a lot of words for no one.
It's a complicated question, though, because it's not just easy. I don't think it's
So to make it simpler, though, the market... So if you're just looking at the data numbers today when it came out, the first thing you look at, I look at the currency, CAD should be strengthening on this. It should be strengthening because it implies that they won't cut rates. And the yield curve should have shifted as well. But that didn't happen. It was a very muted market response.
Everybody knows pre-cons are cooked.
It was a muted response, but also inflation rose above expectations. So we've talked a lot about that. It's not so much what happens, it's what happens relative to the market's expectations. And that's what I thought was really interesting, that not only did the currency not move, the yield curve not move, but the the overnight index swap, right? So that's how you bet on next.
So what are the odds right now?
The odds are 79%, but they moved to 81% of a cut next week.
So market odds are about 80%?
Yeah.
Do you want to take the Twinkie bet now?
I know which way I'm betting.
We have to ask the crowd.
Hold on. Well, do you want to ask the crowd first, and do you want to go?
Okay, crowd, which way? Okay, hands up if you believe the Bank of Canada will be cutting rates next week.
Oh my.
Okay, let's do it the other way. Hands up if you believe they will not be cutting rates.
I have a different question. Okay.
Hands up who has a variable mortgage.
Hands up if you think that the Bank of Canada is ignoring their inflation mandate. Well, that's called.
I think that's the key, though, Rich. That is absolutely.
You got two hands over there.
That's called a losing credibility, right? The central bank is a losing credibility. Anyway, sorry.
Place your odds.
I don't know if they're losing credit. I think they're like maybe headline news that they're losing credibility by doing that.
Sorry. You're right.
But remember, they call the banks every single day, all the commercial banks. They know what's happening with balance sheets, loan portfolios, demand, and spreads. And I would imagine the banks are telling them, yeah, business is okay. Don't be worried about us, but you should be concerned about us. There's a difference in being worried and concerned, of course. So I think that's the message they're getting. So if they don't cut rates next week, 80% of the market is wrong on this. And this 80% is not, like us putting our hand up or down in the room. They have money positioned already to benefit from the rate cut happening.
Or to hedge.
And I don't know if Tiff and the boys have a lot of friends anyway, but Christmas is coming up. I'm pretty sure they're going to be invited to a party coming up.
Well, I mean, there's another angle to this. The other angle is that they're seeing, the other argument is that they're seeing this inflation as things that are transitory. Our number one favorite word of the Looney Hour, transitory. And that we think that over the next little while that there's so much weakness in aggregate demand, unemployment's rising, job losses, even though a couple weeks ago the jobs were strong, we know that that's bogus. Jobs are going to continue to get weaker. People are worried about their jobs, they're going to retrench, house prices are falling, there's a lot of weakness, and that weakness in aggregate demand is going to translate to inflation, and maybe the central bank is looking through to that.
Okay, Steve, line up the bet.
I don't want to go first. You want to go first?
I'm in for a cut.
That was easy. No explanation. Just.
I think I already said the explanation for it.
I mean, I'm with you. Wisdom. I think that I'll go no cut. I think that my view ultimately is housing.
But you always have the cheer for a cut.
Yeah, I do.
Yeah, you're a real estate.
Give me that leverage. I just think that I think housing is just a huge part of the economy. I think it's incredibly weak, as we had a huge panel on today. I think it's really weak. I think rents are not rising. I think the Bank of Canada will look through that and say clearly rents are declining. If you have, a head on your shoulders, you can see that. And I think that the job loss headlines are ramping up. I think everybody knows it's the labor market.
So they're probably looking through the CPI data print.
I just look at even the AI stuff. I think is medium term. It's how many jobs are going to be replaced by AI, or even the notion of that, I think, is giving a lot of people concern. So I don't know. For all of that, for me, I just don't see how any of that is medium-term inflation. I think you can have upticks, but I'm all of this sounds very disinflation. People losing jobs, house prices declining, AI replacing your work. That doesn't sound very inflationary.
Yeah, but the problem is that gotta love I fell in love with my IceCap model. Never fall in love with a model. I mean, that's the problem though. So I'm going to go for, just to make things interesting, I'm going to say that they're not going to cut. I'm going to. I think that just that they're going to they're going to have their come to Jesus moment. They're going to.
This guy's so naive.
But I think what's also happening here, I'm not trying to move away from Canada, but if you're following what's happening in the UK. So in the UK, if you know which country, their inflation is sticky. It's rising. Their economy is struggling. Their budget deficit is deteriorating by the month. And yet, what is the central bank doing?
They're cutting.
Yeah, they're cutting, which they shouldn't, because inflation is very sticky.
4% and rising.
A British accent, please.
It's 4%, mate. I hate doing that.
So, we talk about the theme of, this race to zero is back again. And even if they don't cut next week, they're on deck, they're on alert that they likely will have to go in that direction. And by the way, tomorrow, I think the inflation data is coming out in the UK as well. So we'll get some more confirmation with that. It's funny that the Finman in the UK today, is it Rachel?
Rachel Reed, Rachel from accounts.
Rachel from accounts. She said, yeah, we're going to do, I don't know what she's going to do, but she's going to do something to reduce inflation for the Bank of England. I don't know what they're doing, but they're tying themselves up in these conversations, and the Bank of Canada is going down that exact same path. They're much more articulate than what's happening in Britain. But, again, we have the Bank of Canada on the 29th, right, next Wednesday. And then the budget day is November 4th. And hands up if you think the Bank of Canada is getting a call from Ottawa leading into that. There's some naive people here. There's not a lot, but there's some.
They used to work together. They're definitely at the bar all the time together.
But they have to. I mean, we're going to talk about the budget and how that's going to look and everything in a little bit. But every country needs lower rates. Like even the Americans. So the president is saying, I want lower rates. And he's putting his guys on the Fed board, And they're, I want to cut rates by 100 and all that stuff. The entire world has borrowed too much because it always needs stimulus. You always need to stimulate the economy. And now it's at the point, in order to do stimulus, they need a lower cost of borrowing to run that stimulus. At the exact same time, the economy is grinding tighter. So it's not just Canada; it's everyone that's hitting it.
But that's the difference between we talked about what's due. So a lot of I think that's in a weird screwed up way, Donald Trump's actually being honest with everybody. In a total opposite way in Canada. He's saying we need lower rates because they have 30% of their debt maturities that need to be rolled over in the next 18 to 24 months. Canada's the same. We have 30%. The federal government owes 1.45 trillion, and 492 needs to be rolled over in the next 18 months.
So if I'm a mortgage borrower, do I just try to time my fixed renewals with the Canadian government?
I mean, actually, that's actually not even a crazy idea.
Just look at their balance sheet.
Don't look at their balance sheet. Look at their debt maturity, the debt maturity profile.
Who's the finance minister now? He used to be Freeland.
That guy with the really annoying voice.
The French
Come
guy.
on, he's got a horrible voice.
With the French guy, what's his name?
Who has the horrible voice?
Champagne.
Champagne.
Is got a horrible.
Just follow his balance sheet, basically.
Just look at the debt maturity profile. It's amazing. 30%. It's huge. If you look at France's debt maturity profile or England, which you could argue are in much different place. France has a budget deficit of 5% of GDP. England is, who knows, I can't remember the exact number, but if you look at their debt maturity profile is uniform.
So the question is, have the French and the Brits, have their yield curve deviated from everyone else? So is it too high?
It's rising.
Their 10-year is rising, yeah. And Japan, holy smokes, they're I think they're 30 years at the highest in...
Well, not ever.
30 years. Yeah. And so the question is whether the British and the French rates have to come down and get closer to what Canada is and the Americans, or is the opposite? Maybe their rates are where a country's 5 and 10-year rate should be, with those kinds of different debt metrics and things like that. And so the Canadian rate has to go up.
But that's not what's been...
Again, Steve doesn't want to hear that.
That bond yield has been pretty flat though.
It's actually come down. The whole yield curve's actually come down.
Yeah.
So the 2-year, 5-year, I'm trying to find the chart quickly. It's just the whole yield curve's come down, which is good for the federal government if we're honest.
And even the American 10-year as well.
It's also come. It's about to hit 4%.
Yeah.
Which is a big deal.
Do you have a personal view on that? Do you think that yields across the curve move lower? I know, because Keith, I know you're kind of in the recessionary camp, which is race to zero. People, the job layoff announcements. I think we had Molson Coors just announced today 9% of the workforce in North America gone.
There's loads of them. You want to read?
Yeah, just big ones. We had GM announced their electric van production in Canada. 1,000 workers gone.
There she was.
Right? So it's are you of the view the whole curve moved?
So I think it's moving the way it should. So, we do expect some kind of liquidity credit crisis will develop. And it hasn't happened yet. Once it happens, everyone will say, yeah, of course it's going to develop. But right now, the Canadian curve and the American curve, it is acting as if growth is slowing and maybe there's a recession coming. It's happening exactly the way it should. Credit spreads are not, and there's another reason for that. I guess maybe we'll talk about that as well. Meanwhile, over with in Britain and in France, they are getting the headline, the IMF have to come in and help us.
It's never going to
So
happen.
something is, again, like until the accident happens, the Canadian-American data, yeah, it makes perfect sense. Or until, something happens with the French and the Brits, maybe their curve should come back in. But something is not right here.
What are you worried about most? Like credit spreads? You want to talk about that? I know you're really worried about private credit.
Say it again?
You're worried about private credit.
Yeah, so liquidity is always something you need when you don't realize you need it. I don't know if I said that properly. People don't value liquidity until it actually helps them. But if you look at yield spreads right now in the high yield sector as an example, they're incredibly tight. And that means that's a sign of a very healthy market. But what's also helping, because there's so much credit being issued in the private credit space, and all that money used to originally, not all of it, but a significant portion of it was issued, let's call it in the public space. So like your favorite bank's bond fund was going to buy it, your favorite ETF high yield fund was going to buy it and stuff like that. That demand of buying in the high yield space, it's still there. It's not declining at all. However, the amount of issuance is slowing because it's all moving to the private credit sector. So it's a classic case where demand is greater than supply, which is pulling prices down in the high yield space, which is giving the impression that credit spreads are very tight and it's a very healthy market.
Yeah.
Did I say that well enough?
I think so. But I think you're not stressing how tight they are. They're literally as tight as you've ever gotten since 1990. So when a spread is is basically a reflection of risk. If spreads are big, there's more, you're being compensated for things that could go wrong, defaults, counterparty risk, inflation, good growth, bad growth, etc. And when spreads are really, really tight, it effectively means you're tight over something, spread over something, spread over the risk-free rate. I understand that there's risks to the government bond yields, but just humor me. And so the spreads are really tight over the U.S. The risk-free rate. Canada, they're also really, really tight. And so that's the point. There hasn't been enough issuance, which reflects this demand issue. And so I think and then also there was a massive refinancing wave when interest rates were really, really low. And we're about to enter in the end. We talked about the debt maturity wall that's happening in Canada. We're entering sort of the beginning of a sort of refinancing stage in this credit market as well.
You're starting to see some stuff in the regional banks too.
Yeah, I wonder. I mean, the regional banks have really done poorly. So if you guys want to follow along at home, I don't know if we're allowed to talk about the specific ETF, but there's a regional bank ETF you guys can dig up, and it's done really, really poorly. I don't know if that reflects specifically
The U.S. bank story?
Yeah.
So in the U.S. last week especially, first of all, the result was that some of these smaller regional banks in the U.S., that their stock price declined, I think it was like 8 to 15%.
Yeah.
In that range.
Yeah.
And we're like, oh wow, yeah, there's a big credit event happening. What was happening, there was a very large borrower, I think in Southern California, LA area.
There's one also in Arizona.
I think there's some funny things going on there.
There's also Arizona as well.
Yeah.
Remember Zion? Oops.
But the point is, there's a lot of debt that's sort of just vaporized. And one of the holders of the debt, or the issuers, we lent them even more money, and if you're looking at the credit structure, were these smaller banks. So one was, I'm not going to name the name of the banks here for different reasons, but one was Utah-based, and I forget where the other one was affected. But the point is, though, if you get a credit challenge in the banking world, whatever that number is, you have to multiply it. There's a multiplier attached to it, because the banks are levered 10 to 30 times. Depending on how you measure it. And so again, if we go into a slowing economy, some guy won't be able to repay their debt. That's going to happen, not just in the mortgage world, but small business and so forth. And then you can get a snowball knock-on effect. And that's what I'm looking at all the time. I think everyone would agree a market economy, a normal cyclical economy has not existed in the West for 15 years. So when the US housing market crisis hit in 08, 09, policymakers everywhere, they decided let's just suspend the pricing of risk. Zero rates, negative rates, QE, enormous fiscal stimulus, and you name it. And you go through this for 10 and 12, 15 years, and it's just creating all these distortions. Now, finally, the economy is going back to a regular cycle. And, it goes like this, of course. Now we're at the trough and we're coming down again. It doesn't mean it has to come straight down hard. It just means that we are grinding lower. But because there's been so much money borrowed and people just don't appreciate risk, like there's some guy out there is going to go offside. And because a lot of money has moved, to the private credit markets and equity markets as well, it removes that liquidity that people need. And that's the risk that we're facing. So I think that's what the Bank of Canada will be looking at. They're not going to look at Rich's CPI number at all. Instead, they're going to be concerned about, hey, we need to keep the party going because we always need stimulus. And how's the central bank stimulate?
They lower interest rates.
Yeah, they're going to cut rates.
Well, the Fed Powell was out, last week saying that they were looking at tapering QT, quantitative tightening. And you think that's like a precursor for the next move is we'll taper QT, and at some point here we'll move to QE.
Yeah, I mean, we talked about that a few weeks ago as well, I think.
Talking about last year.
207, something like
We talked
that.
about it last year. They're going to do yield curve control. They're going to control it. They're going to control the yield curve by...
I guess we don't know how imminent that is,
No.
but that seems like the logical...
But they're telling us. This is the thing. It's like they're telegraphing. Like, I was talking about them, dismissing the 3 preferred measures of core inflation. I mean, there was a gentleman who did a speech on how they're moving away from looking at those indicators as the be-all, end-all. Just a couple of weeks ago, if you just Google speeches, Bank of Canada, you'll see. And people would say, disagree with that. They haven't done it implicitly. But that's the thing. It's like they're telegraphing, and it's the same thing with the Fed. They're telling us what they're doing.
Do you think gold reflects that?
I don't know.
So it's now at our gold is at a record 30% of global reserve holdings. I know you have some commentary on that, but
Well, yeah, I think so. There was an article from J.P. Morgan that argued that it's actually that reflects as increases in price and not necessarily the massive increase. Let's say an equivalent increase is in the ounces of gold that's held on reserve. So yes, there is an argument that all central bankers are increasing gold in ounces held on reserve. By the way, does anybody know how much the Bank of Canada holds in reserve? Yeah, so in 2015, 2016, the Bank of Canada basically sold the last 92 million ounces, I think it was.
92 ounces?
No, it was like 92. It was a lot of ounces. It was a lot. 92,000, I think 92,000. It was a lot, but anyway.
how are you looking at gold? I didn't see you in the bullion lineup today.
The lineup was empty. It was empty.
Because it dropped 5%.
One of the
line was
signs, the
gone.
sure signs, 'cause markets do things, and there's never they're never rational, really. It's always if someone wants to buy and someone wants to sell, that's what the price is of anything. But I tell you what, when you start seeing pictures online of people lined up at the store to buy something, or you get a bunch, I saw the one, I think was it in China?
Vietnam.
They're all like,
it was Australia too. Australia, there's just lineups of people lining up to buy gold bars.
Yeah.
That's when you get, the exuberance is, it's very strong. Now, obviously gold's down hard today. People are watching that. I think that's a sure sign last week when you saw the lineups and everything. But there's also something else happening. Like one of the big stories with gold that people don't, again, appreciate. It's not just a U.S. story all the time. Don't always focus on the U.S. You really have to understand and appreciate China and what's happening over there. So China has a closed capital account. So that means you cannot move your money out if you want. I think an individual is allowed to move out 50,000 USD equivalent a year. That's it. So let's just say in Canada, with the budget coming up, they announce, you know what, Canadians, you can only move out $50,000 a year out of Canada. You know, would you guys like that? No? Yes? You know, one guy said thumbs down. It's funny, I think I noticed earlier, we are at a university here, of course, and I think on the street level, there was, I think the street sign was a bunch of students there, you know, tomorrow's leaders. They're saying, down with socialism, up with communism, you know, or something like that.
I did not see that sign.
Yeah, the commies. Anyone else see that sign out there?
There is no way that's real.
It's out there, and so I heard it. The commies are there. But back to China and gold. So if you can't move your money out, but at least if you buy gold and you're getting physical, and then you're literally taking it out of the Chinese system with that at that point. So it's a way for people, like same in the crypto world, you know, people want to get money off grid and stuff like that. But the price of gold is definitely telling you that it's not just a few old guys who've been holding gold for 40 years, you know, finally right. It's not that. There's something happening underneath where a lot of people are starting to figure out, wow, I need to get my money off the system. And you know, we talk about central bank digital currencies all the time.
Please say no to central bank digital currencies.
And it's sort of we continue to go in that direction.
Yeah, you think of like a lot of it's geopolitics, obviously.
Yeah, you have that happening. Yeah, absolutely. But the Chinese economy, it is incredibly unhealthy. So if you look at the size of their banks, the bank's assets. So by the way, in China, when a bank lends money, actually this goes into our conversation coming up with our budget coming up, the Canadian budget. But in China, when a bank lends money, they never write it off. It's never a bad loan in China. The numbers are minuscule. And so what happens if somebody doesn't pay back their loan in China, so it's a non-performing loan, but they just keep rolling that over every period.
Sounds very Canadian.
So on the bank's, but on the bank's balance sheet, their assets never come down because the bad asset is still there. It's not called a bad asset, you know, it's still a performing loan that's not paying out. So if you look at the size, like do your own research, and you see the size of the bank assets in China relative to GDP and compare that to the American equivalent. Because in America, what do they do with their bad loan?
They write it off.
Yeah, they write it off.
Charge-offs, which are huge.
Yeah. Same thing in Canada, we have those rules. But when you have that happening in China, then you realize, oh wow, there are things happening.
I mean, there are non-performing loans in China. They're just very, very low. Same in Canada. The delinquency rates, I still can't quite believe the delinquency rates are less than 1%. It's the same shit here. They extend the amortization. They do all kinds of shenanigans to basically keep these people paying off these loans.
Yeah, well, someone came up to me in the hall earlier talking about the fixed payment variables, right? Which is like those are all like effectively delinquent loans that have basically been saying, don't worry about paying back the full payment. You can tack it onto the interest. The loan balance actually is growing.
Yeah.
But it's still considered a performing loan on the balance sheet. Same as the developers that are, you know, the banks that are doing these blanket appraisals and pre-construction condos and effectively doing 100% loan to value just so they can get it, you know, these buyers to close so that way they're not, defecting on their construction loan for these projects. So yeah, I mean, there's a lot of shenanigans going on, but.
Anything else?
What else keep you up at night? I don't know if you guys saw the global carbon tax.
Oh,
That's
yes.
been the kind of a key theme of Canada, really, but especially the Looney Hour. We talked a lot about the carbon taxes and the new administration, of course, getting rid of it. There was a proposal, Keith, for a global carbon tax, which was floated by the UN. Basically, it was a fee or a levy, Rich, on shipping. 3%. So shipping is about 3% of global emissions. And they proposed a carbon tax on shipping around the world.
I'm surprised it's that low. Oil, like, if you care about emissions, you should very much care about tankers. Tankers burn something called marine diesel. So there's obviously different types of distillates.
Oh, here we go. Buckle up.
You have to understand anyways, when you're refining oil, which Canada does sometimes, you have different types of distillates, and the sort of water vapor like the more vaporous, I don't know if that's a word, type of refined product rises to the top and it's caught. So when you when you have hydrocarbons that are like almost vapor, that's like kerosene and jet fuel, etc. And at the bottom, it's bitumen. And so that's like almost like sludge. And it's what we use to tar roads, and there's all kinds of industrial applications. It's very, very useful, by the way. Bitumen, despite what David Eby might say, bitumen is extremely, extremely useful, and all countries need it. And right above that, like bitumen tar, is this like sludgy black shit, basically. And it's what they burn in these tankers. When you look at a cruise ship or any of these tankers that are on the ocean.
So maybe Eby's right about the tanker ban.
Yeah, maybe he's right. But like, it's actually amazing. Sorry, I know I'm going on, but it's just so cool. What's amazing is the engines are the size of small houses, and you have a piston that's the size of a small car.
Is it a multi-unit house?
Four-story laneway.
But it's so cool. So like, you take this marine diesel sludge, and it actually has to get heat. It has to be hotted up. They need to heat up that marine diesel sludge to like 60 degrees Celsius, and then it's pumped into the piston, added with oxygen, and exploded, which moves these giant pistons up and down. It's horrific. It's got SOx and NOx and all kinds of hard metals, particulates. It's horrific for the environment. And so I get this idea that they want to tax carbon out of these emissions, but ultimately it's just more taxation without representation. There's no democratic mandate to do this. China continues to do whatever they want as far as emissions. Canada's negligent, and it's just a transfer of wealth from countries that will abide by some rules to countries that will not. So it's just more of the same bullshit, but I love that kind of stuff. Sorry.
So the UN was about to vote on that this week, a few days ago, and the Canadian team, they're all in on this. They're flying over, of course, to do it. And at the last second, the Americans said, it caught their attention, and they said, we're not signing this. No way in hell. And people think, well, it's one vote, 600 countries are for it, and one is against it, 600 is greater than one. Literally hours after the Americans said, we are not supporting that, it started falling apart. And I think the official response is now, we're going to review it again, or we're going to delay it.
So they blocked final adoption and forced a 1-year delay.
Did China sign on to that? China has the largest merchant fleet in the world. Which is obvious because we import incredible amounts of products from China, and they ship all over the world, etc. Were they going to sign on to it, or?
ChatGPT is finding out right now. Short answer: no. China did not commit to the proposed global carbon fee on shipping yet.
Yeah. Okay. There you go. Yeah. I'm not surprised at all. I mean,
what about BC?
What about BC? It's just nuts.
We definitely signed on that.
BC. Well, no, there's a tanker. Anyways, just
tanker ban, but the U.S. ships are allowed to go up.
Yeah, no, I didn't actually. I actually never had thought of that. It was crazy when I was reading that story, and I was like, oh yeah, of course. They just put the oil in Alaska and then just ship it down the coast.
Yeah.
And so they're allowed to go through it. So territorial waters are about 150 nautical miles off the coast, and there's definitely American ships going in Canadian territorial waters.
I think they're outside though, aren't they?
Oh, okay, fine, sorry, okay. But anyways, the point is that they're shipping oil, and anyways, it's just crazy.
Heather Perot is still the best follow on the
Canadian
Canadian energy space if anyone's
Yeah.
really interested in that from like a pragmatic view.
The other person who's amazing is Javier Blais. I can never. Bleh.
Javier.
Yeah, but he's amazing. He's a journalist for Bloomberg, and if you ever want to learn about energy and any of it, he wrote an amazing book about commodities. I would definitely recommend you read that book. That's a really cool book.
I don't know, Keith. I think that's about to get it. I mean, we glossed over the First Nations stuff in Richmond, but it's interesting. I actually like to touch on that. So that land that's actually impacted.
How big is it?
It's like 700 acres, I think.
That seems very small.
It's large. Well, they used to fish there 150 years ago. So.
Allegedly.
But no, come
on. Anyways, I'm gonna be tarred and feathered now. I'm just saying, who knows if they did or didn't.
We're gonna get locked in here now. No, I used to rent a condo like on that land that is like proposed it's interesting. It kind of hits home. It's like, oh, interesting. But there's a bunch of like strata buildings that are along that parcel, and like those are just like completely illiquid now. Like the market was bad enough, and then imagine like, hey, your title is now like at jeopardy. Like who's going to buy that? So all those units that are listed for sale, I mean,
Some sucker.
then you get a 50% discount on that
All right, let's do it.
and lobby the government. But yeah, no, I think it's important. Yeah, and we chat about it in the panel, but you know, for the audience that maybe isn't here, it's 95% of land in BC is unceded, effectively, where it's still there's no treaty signed, effectively. So it's kind of the one province in Canada that hasn't really dealt with the negotiations with the First Nations. So I know I had to go through this whole sort of rabbit hole of learning all about it because everyone's asking questions and.
That's really important in your business, I guess.
It never crossed anybody's minds 5, 7, 8, 9 years ago, but I think you're hearing more and more of it. And I think it's just because it hits home, like in Richmond, everyone's like, "Oh wow!" Like they just changed that.
But 700 acres is not that big. Are people worried it's going to have like knock-on effects to other people's property rights?
Well, the challenge is like some of the land that, for example, is in there is like private sector land where like Amazon is leasing land. It's like, okay, if you're Amazon, you're a major corporation. You're going to start investing in places like BC, right, along the river. We're like, well, maybe that area is contested, but like maybe on the other side that gets contested in 2 years, right? So it's like it sort of sets a precedent where it's like, hey, the court ruled one way, maybe other bands will come forward and say, well, you know,
So
we
why
fished
is
over
this
there.
happening now? Why hasn't it happened 5 years ago, 10, 20, 30?
I don't know, again, all the politics of it. I think it's been kind of boiling in the background. I think everyone's just kind of suppressed it. And I think it's been going through court for a number of years and they finally reached a decision. And now everyone's like, oh, wow, it's actually real.
But what's the end game here? I mean, are all property rights?
I think what the end game is, like, if you look at like the Heritage Act that the government's put forward, effectively is there's just going to be all these negotiations. I think that happen. There's all these negotiations. They're bringing in policies that allow the government to effectively negotiate behind closed doors, so the negotiations don't need to be public knowledge. So there's been a bill that's been introduced to effectively like, listen, we're going to do all these backdoor arrangements and agreements. So there's a lot of like concerns. Naturally, there's some conspiracy theories out there. I don't know how this all plays out. I'm not in those rooms, but I think that it clearly impacts. And like Taylor, who's on the stage, who does private lending, is like, yeah, we're not lending in that area, right? So it's a real problem if you don't have clear property rights, and if fee simple ownership becomes in jeopardy or a question mark. I mean, how do you deploy capital? You don't.
Is there a similar problem like in Nova Scotia or Quebec or whatever?
Not to my knowledge. Keith, on your street? He's just fighting the multiplex.
Yeah, that's right.
You know what I find interesting with this whole story? Like a lot of my non-Canadian friends, when all this broke out, it was like a couple of weeks ago or something like that, they're sending me notes, and they're literally, you get the little face with the smiling with the tears coming out.
Emoji.
The emoji. They're laughing. And they said, is that really happening in Canada? And my response is yes. And there's so many people investment people outside of Canada, they're literally shaking their heads at what's been happening here over the last number of years. And it's just like, it's not getting better. It's always one weird thing after another. So
Canada's so desperate for CapEx. Like, we just need money to invest in anything to improve I couldn't do a Looney Hour without saying my favorite
Well, you're
word.
going to get it.
Productivity growth. You need to improve productivity growth. You need CapEx to improve labor force productivity growth.
So by the way, so the budget coming out now in a couple of weeks, is going to be, it's going to be this monumental fiscal event. In that, first of all, they're changing the definition on how they use math, so that's going to be fun to watch. And then, there is the potential for it having a very significant effect on Canadian bond markets, the yield curve, and the currency. And so in my world, we think in probabilities all the time. It's never 100% and 0%. But the potential for something to go off sides in a couple of weeks with this budget, it's high. Like it is a big number. Whether it's 30% or 60, I don't know.
30 billion.
sorry, percent. Yeah, again, they're trying to. So what was the National Bank guy? His estimate for the.
Well, Trevor Tome, professor of economics from Calgary, said it was going to be 100 billion.
Oh, 100 billion. Yeah.
Remember, Krista Freeland, she basically fell on her sword because she didn't want to do a $50 billion budget or something. Anyway.
Yeah, they weren't going to hit a 5 number, and so so again, we're in this place where the French and the Brits, they're really struggling with it, and again, maybe everything turns out fine and it'll be okay. But I know for us, we get excited about weird things, in our world. But we think it could potentially be one of these events. And we're going to follow it closely. We'll do extra Looney Hour coverage with it and stuff like that. But everyone out there in our world, they're waiting for the number. And then they're going to, again, this year, the Prime Minister decided he's going to report it differently than what's ever been reported before. And again, that should send you a signal that something is a bit odd with it. So we're going to do a Looney Hour bet on that as well, what the budget is going to be. Surplus or deficit, of course. So not here, because we'll do
that's for next week.
We're going to bet next week on what percentage is operating and what percentage is, capital. Yeah, capital. Yeah.
So if we go with the capital operating approach with our budget, it's kind of similar to what the Chinese are doing with their domestic economy. And the Chinese are not admired for their financial accounting for their economy. Again, this is not a good move. What we're doing. So we're going that direction.
I think that's a good place to wrap it. I think we got a BOC based on the crowd's opinion. We have a BOC rate cut next week, and we got a budget to look forward after that, and there'll be more pontificating, but lots to look forward to. So it's been a pleasure as always, and appreciate everybody coming out tonight.